Hi, welcome to the Crypto Republic. If you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video and subscribe. Hello, XRP Army, and welcome back. Here at the Crypto Republic, we give you the bird's eye view, a satellite perspective to spot the big picture shifts while everyone else is stuck in the daily chaos. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. What if the biggest XRP story has nothing to do with hype and everything to do with infrastructure? Because right now, there's a growing theory spreading across the crypto world that XRP's future may not depend on retail traders, meme cycles, or even Bitcoin dominance, but on whether Ripple quietly embedded itself inside the plumbing of global finance years ago. And according to XRP supporters, that switch flip moment could be already closer than most people realize. Now, before we go any further, this video is not financial advice, and we're not claiming XRP will reach $300. These are speculative theories and opinions currently being discussed across the crypto industry. Always do your own research before investing in any digital asset. But today, we need to talk about why some investors believe XRP, the anointed one, could eventually become one of the most important settlement assets in the world. Why infrastructure giants like ACI worldwide, Volunteer Technologies, and Venestra keep showing up in these conversations. Why massive XRP custody movements continue fueling speculation about institutional position. And why Ripple's long-term strategy may have never been about signing one bank at a time. Because if this theory is correct, even partially correct, it could completely change how people think about XRP. And the interesting part is this. Most people still analyze XRP like it's just another cryptocurrency. Supporters argue that Ripple never wanted XRP, the anointed one, to compete in the same lane as meme coins, speculative, DeFi projects, or short-term hype assets. Instead, they believe Ripple was trying to build financial infrastructure. And infrastructure plays by completely different rules, ladies and gentlemen. Write that down. Think about the internet. The companies that became the most powerful weren't always the ones consumers talked about every day. Sometimes they were the back-end providers, the systems, the rails, the networks, the technology layers that quietly powered everything else. That's why this XRP discussion has become so intense. Because if Ripple successfully positioned XRP Ledger inside cross-border payment systems, liquidity hubs, or institutional settlement rails, then the long-term implications could be enormous. Not overnight, not instantly, but over time. So today we're going deep. We're going to break down the switch flip theory, the infrastructure partnerships, the custody speculation, the regulatory conversation, and why supporters believe XRP could eventually benefit from a completely different type of adoption cycle than most crypto assets. Let's dissect this. One of the biggest misconceptions people have about Ripple is that they assume the company's goal was always to be bank to bank. One partnership here, one partnership over there, one institution there, one institution here, one payment provider at a time. But XRP supporters argue that Ripple's actual strategy was much bigger. Instead of onboarding thousands of financial institutions individually, the theory is that Ripple focused on integrating with the infrastructure providers already servicing those institutions. And this is where things get very interesting. Take Venestra, for example. Venestra is often described as supporting thousands of financial institutions globally. Now think about what that means. If XRP Ledger functionality became available through software systems already used by banks around the world, Ripple wouldn't necessarily need to negotiate separate integrations with every single institution individually. The infrastructure already exists. That's why supporters compare this idea to ETFs. When a major institution launches an ETF product, millions of investors can gain exposure instantly through systems they already use. The investors don't need to manually build the infrastructure themselves. The rails are already there. XRP supporters believe the same principle could theoretically apply to banking infrastructure. One integration, one software layer, one settlement option. And suddenly, thousands of institutions could potentially access XRP-powered systems almost overnight. That's the core of the switch flip narrative. Not gradual retail adoption, not slow speculative momentum, but institutional accessibility through existing financial rails. Now, whether you agree with this theory or not, it's easy to understand why it captures attention. Because replacing global banking infrastructure from scratch would be incredibly difficult. Banks move slowly. Financial systems are deeply interconnected. Operational changes cost money. Compliance reviews take time. And institutions typically avoid unnecessary risk. But if a provider already integrated into your workflow suddenly offers a faster settlement solution, that becomes a much easier conversation, especially if competitors begin exploring the same technology. That's why supporters believe Ripple's strategy may have always been about positioning itself quietly behind the scenes rather than chasing retail excitement. And honestly, when you look at Ripple's public messaging over the years, there has always been a strong focus on payments, liquidity, and enterprise integration, and institutional utility. Not meme culture, not viral hype. That distinction matters because utility driven narratives often move differently than speculation driven narratives. And supporters believe XRP's real story may only begin if institutions ever start using digital assets for actual settlement at scale. Real quick, if this kind of analysis you just heard is valuable to you, I want to let you know about something. One good tip from the pits can easily pay for your entire year subscription. If you want the deeper macro research and to learn how to take advantage of all this, come and join over 550 active traders and investors in the Patreon, the Crypto Republic Desk Monthly. It's all about being prepared for what's coming. And being a financial mercenary is about getting ahead for ourselves and our family. Click the link in the pinned comment below. Now let's get back to the data and dissect this. Let's talk about the infrastructure companies that constantly appear in XRP discussion. The first is ACI Worldwide. Then there's Valant Technologies. And of course, Finestra. Ripple's relationship with these companies date back several years, with partnerships and collaborations developing between roughly 2017 and 2020. And supporters believe that timeline matters, because while much of crypto was focused on speculative mania, Ripple appeared to be spending years building enterprise relationships in the background. Valant Technologies becomes especially interesting because of its connection to payment messaging systems associated with SWIFT, compatible financial institutions. And naturally, that has generated massive speculation online. Some XRP supporters believe Ripple's technology could eventually become embedded into existing financial workflows rather than replacing traditional systems outright. That distinction is extremely important because historically, the technologies that scale globally often don't win by destroying old systems overnight. They win by integrating into systems people already use. Think about cloud computing. Most companies didn't suddenly abandon everything and rebuild from scratch. Cloud services gradually integrated into existing enterprise systems over time. Supporters believe Ripple may have pursued a similar strategy, not forcing banks to abandon infrastructure, but offering tools that improve settlement speed, liquidity efficiency, and operational costs. And when you combine that with XRP's ledgers, transaction metrics, supporters become even more bullish. Brad Gallinghouse has repeatedly highlighted statistics associated with XRP ledger performance. Supporters often point to more than 4 billion transactions processed, settlement speeds around 3 to 5 seconds, and transaction costs below 1 cent. None of those metrics guarantee future mass adoption. That's important to say clearly. But supporters argue these characteristics make XRP ledger structurally attractive for high-volume payment environments, especially compared to slower settlement systems that can involve delays, intermediaries, and operational friction. Another reason this conversation keeps growing is because global finance itself is changing. Cross-border payments remain expensive in many regions. Settlement inefficiencies still exist. Liquidity management remains a major issue for institutions, and governments worldwide are increasingly exploring digital payment infrastructure. That creates an environment where blockchain-based settlement discussions continue gaining relevance. Now, does that automatically XRP wins? No, not at all. Competition exists. Banks may prefer internal systems. Governments may pursue central bank digital currencies. Alternative blockchain networks continue evolving. But supporters argue Ripple at least positioned itself inside the conversation years earlier than many people realize. And that's why the infrastructure narrative refuses to disappear. Because the more people study enterprise integrations, the more they start asking whether Ripple was playing a much longer game all along. Real quick, if you're finding value in this breakdown so far, take a moment, hit the like button because it massively helps the channel reach more people interested in crypto and technology finance. Also, I want to hear from you and your perspective. Do you think Ripple's infrastructure strategy could realistically scale through providers like Finestra and Valant Technologies? Or do you think the market may be overestimating XRP's long-term role in global finance? Drop your thoughts in the comments below. And if you want more deep dive content like this covering XRP, Bitcoin macro trends, and institutional adoption, make sure you subscribe and turn on notifications. Let's jump right back into this. Let's shift to another topic that recently exploded across the XRP community, a movement involving approximately 69 million XRP. at market valuations being discussed online. That transfer was estimated around $125 million. And what caught people's attention wasn't just the size, it was where the XRP reportedly moved. According to analysts following the transaction, the asset appeared to move in custody rather than directly onto a public exchange. That's very important. Write that down. That distinction matters because when large amounts of crypto move onto exchanges, traders often interpret it as possible selling pressure. But when assets move into custody, solutions instead. Many investors interpret that as potential long-term position. Now, to be absolutely clear, nobody publicly confirmed who owns the wallet, and there's no verified evidence connecting the movement to any specific institution. But that didn't stop speculation. Some online theories suggested major financial firms like Goldman Sachs or JP Morgan Chase could eventually be exploring XRP-related exposure. Others speculated about future XRP-focused investment products. Again, these remain theories, not confirmed facts. But they spread quickly because institutional crypto adoption has become one of the biggest narratives in global finance, especially after the rise of Bitcoin ETFs and increasing institutional participation across digital asset markets. Supporters argue that once major institutions begin viewing digital assets as legitimate financial infrastructure, interest could eventually expand beyond Bitcoin alone. And XRP supporters believe utility-focused assets may benefit from that shift. Now, whether or not that actually happens remains uncertain, but one thing is undeniable. Large crypto wallet movements influence market psychology, and markets are driven heavily by narratives. And in fact, some analysts argue narratives often move faster than fundamentals in crypto. People don't just react to confirmed information. They react to possibility, potential, future expectations. And XRP may have one of the strongest long-term narratives in the entire industry. Because supporters aren't simply talking about speculative appreciation. They're talking about a possible transformation and how money moves globally. That's a much larger story, ladies and gentlemen. Another reason XRP's discussion remains so intense is because of the way technical analysts interpret the market structure. You constantly hear terms like accumulation, distribution, breakouts, liquidity grabs, retests, and stop hunts. Now, for newer viewers, a stop hunt refers to sudden volatility that triggers emotional reactions from traders before the market reverses direction. Many traders believe institutions use fear and excitement cycles to accumulate positions more quietly over time. Whether that's entirely true or not is an extremely common theory across financial markets, not just crypto. And right now, some XRP analysts believe the asset may still be inside a broader accumulation phase. At the same time, another major debate has emerged around XRP versus Bitcoin performance. Because while XRP has delivered strong moves against USDT during certain periods, some analysts point out that it has still underperformed Bitcoin across other time frames. Supporters interpret this differently. Some believe Bitcoin dominance will remain the primary force in crypto. Others believe altcoins like XRP could eventually outperform if liquidity rotates away from Bitcoin later in the cycle. Historically, the crypto markets have often moved in phases. Bitcoin rallies first, then Ethereum, then alternate assets. The pattern has repeated multiple times in previous cycles. Now, whether history repeats again is impossible to guarantee. But this possibility is one reason XRP traders remain highly engaged. There's also another factor here. XRP tends to be emotionally polarizing. Some investors view it as one of the most undervalued utility assets in crypto. Others remain deeply skeptical. And assets with strong emotional communities often experience extreme, volatile sentiment swings. One week, the market becomes euphoric. The other week, panic spreads. That emotional volatility becomes amplified when regulation, institutional adoption, and macroeconomic uncertainty all collide at the same time. And right now, crypto markets are sitting directly at that intersection because this industry is maturing. Governments are paying attention. Institutions are paying attention. Payment companies are paying attention, ladies and gentlemen, which means the next phase of crypto may look very different from the previous speculative cycles. Supporters believe XRP could benefit from the evolution if utility infrastructure eventually matter more than hype. Now, we need to talk about regulation. Because for many XRP supporters, regulation may be the single most important variable in the entire long-term thesis. One proposal constantly referenced is the so-called Clarity Act. Supporters believe clearer digital asset regulation in the United States could encourage broader institutional participation across the crypto industry. And honestly, that's not an unreasonable argument. Large financial institutions typically want legal clarity before deploying serious capital to emerging technologies. Compliance matters, risk management matters, regulatory certainty matters, and XRP's legal history has made this topic especially important. For years, Ripple's legal battle with the SEC became one of the defining stories in crypto. Supporters believe portions of Ripple's legal progress helped create a more favorable environment for XRP compared to earlier uncertainty. At the same time, critics argue regulation remains incomplete and evolving. And that's true. The global digital asset regulatory environment is still developing. Different countries continue taking very different approaches. Some governments are becoming more crypto-friendly, others remain cautious. But supporters argue one key point. Institutional adoption typically accelerates after rules become clearer, not before. And if broader crypto regulation eventually arrives in major financial markets, many investors believe institutional participation across the industry could increase significantly. However, there's another side to this. Even if favorable regulation arrives, adoption doesn't happen instantly. Markets often overreact emotionally. In the short term, price spikes, excitement surges, speculation explodes. But actual implementation can take months or even years. That's why analysts constantly warn about volatility around regulatory developments, because crypto markets remain heavily driven by sentiment. And XRP tends to amplify that emotion more than almost any major asset, which means even bullish developments may still come with sharp pullbacks and major market swings. Ladies and gentlemen, so when people talk about XRP potentially reaching $300, they usually aren't talking about a normal speculative pump. They're talking about a complete transformation in how value moves across global financial infrastructure. That's the key difference. The bullish thesis depends on several massive assumptions happening successfully at the same time. Infrastructure integration, institutional participation, regulatory clarity, global banking adoption, and continued XRP ledger scalability. That is an enormous list, and none of it's guaranteed. But at the same time, the reason this narrative refuses to disappear is because Ripple positioned itself very differently from many crypto companies. While large parts of the market focus heavily on hype cycles, Ripple constantly focused on payment, enterprise, connectivity, liquidity systems, and financial infrastructure. Now, the market is closely watching to see whether that strategy eventually translates into large-scale adoption. And if it does, supporters believe the effects could be dramatic, not because of memes, not because of speculation alone, but because infrastructure tends to become more valuable the more the world depends on it. And that is why the XRP conversation remains one of the most fascinating debates in all of crypto. If you made it all the way to the end of this video, thank you for watching. I salute you. The fact that you're here shows that you're genuinely interested in the future of finance, blockchain, technology, and digital assets. If you made it all the way to the end of this video, thank you for watching. The fact that you're here shows that you're genuinely interested in the future of finance, blockchain, technology, and digital assets. If you haven't already, hit the subscribe button and turn on notifications so you never miss future breakdowns on XRP, Bitcoin, institutional adoption, and global crypto trends. And if you got value from today's video, leave a like and let me know your biggest takeaway in the comments below. Do you believe Ripple's infrastructure strategy could eventually reshape global payments? Or do you think the market is getting ahead of itself? I'd love to hear your thoughts. Thank you again for your time. I'll see you in the next video. Hope everyone's having a happy Monday, ladies and gentlemen. The markets are in turmoil. Hope everyone had a happy and fantastic weekend. I want to welcome all the new members of the Patreon, the Crypto Republic Desk Monthly, all the new members of the membership channel. I want to go over something that, in my professional opinion, and none of this is financial advice, that we feel is extremely important and everybody should be paying attention to right now. Whether you're brand new, seasoned trader, seasoned investor, starting out, I always go over things that I feel is prevalent that we pay attention to. When the Asian markets open, we're watching the Widowmaker. Again, we have been going over in previous videos about what we watch and why, but nothing at all is telling you more than the DXY. Ladies and gentlemen, the DXY is telling you everything since 2022, okay? Write this down. You got lower highs, lower lows, an unsustainable debt spiral, a compliant new Fed, and the dollar's decline is the hard asset opportunity of the decade, and we feel as well the crypto opportunity of our lifetime. None of this financial advice. Ladies and gentlemen, in the financial markets, again, there's an old adage that is repeated so often it borders on cliche. This was drilled into my head in the fall of the New York Mercantile Exchange. And becoming a financial mercenary, remember, this is rule one. Rule one, the trend is your friend until the bend at the end. Write that down. When it comes to the U.S. dollar index, DXY, the trend has been crystal clear since the peak of 2022. And it's screaming a massive warning to anyone holding fiat currency. Despite the daily volatility, the geopolitical noise, and the endless debates over Federal Reserve policy, the DXY has been carving out a textbook technical patterns of lower highs and lower lows since 2022. Write that down, pull up a chart, plot this. Again, I'm giving you my rec. The structural decline in the dollar is not happening in a vacuum. It's a perfectly coincided with the historic breakout in the precious metals and the explosive free cash flow generation of the miners. Because gold, silver, and the companies that mine them are priced in U.S. dollars, a weakening dollar acts as a massive, undeniable tailwind. The macro backdrop, defined by an unsustainable U.S. debt spiral, structural higher inflation, and a shifting Federal Reserve mandate, guarantees that this dollar downtrend is far from over, not financial, but it's just my opinion. Ladies and gentlemen, if you want to understand why hard assets, in our opinion, are the only safe haven for the next decade, you must understand the math behind the melting dollar and why we feel going 24 months out, we're so bullish on metals and crypto. It's scary. Again, let's dig into the following right here. The structural downtrend. Since peaking in late 2022, the U.S. dollar index, DXY, has established a definitive pattern of lower highs and lower lows, signaling a long-term bearish reversal. Hard asset tailwind. Again, write this down. Because commodities are priced in U.S. dollars, write that down. This structural decline in the DXY is the primary catalyst driving the historic breakout in gold, silver, and the broader commodity complex. The debt spiral. Ladies and gentlemen, the U.S. national debt is accelerating at a pace that makes fiscal austerity mathematically impossible, forcing the Treasury to rely on a weaker dollar to inflate away the debt burden. The Treasury has to rely on a weaker dollar to inflate away the debt. Hence, Operation to Print to Win. It's coming, ladies and gentlemen. We've got to export our way out of this. Say this all the time. The Fed's shifting mandate, the change in the Federal Reserve leadership, and the political pressure to monetize the debt point to a central bank that will tolerate higher inflation, further debasing the currency. The trend is your friend. Drill this one into your head. Until this pattern of lower highs and lower lows is broken, the path of least resistance for the dollar is down, making precious metals and miners the most asymmetric long-term trade in the market. Ladies and gentlemen, if you want to see how we're going to put this to use, come and join us in the Crypto Republic Desk monthly. Join over 550 active traders and investors who've decided to take their destiny into their own hands. If you want the deeper macro research and how this is applied to everyday trading, portfolio management, coaching, one tip from the pits can pay for your entire year subscription. Welcome all our new members. Because this is what's happening. This is what I spend all day talking to people about. All day going over this. It is so easy to find this compass. It really, really is. The world is preparing for more kinetic situations in the ME. We've been telling everyone here for the last 14 days what we thought was coming. We told everybody that we thought the Clarity Act gets done. We go over everything here. This is coming. Because at the end of the day, as far as I'm concerned, and none of this is financial advice, this is my own opinion, and anyone can has any capacity. The markets are driven down by tweets. They're pushed to certain points, extreme support, extreme resistance. It is almost like waiting for the tide to come in. They let markets get too high, whether that's oil, some tweets come out, it pushes it lower. It gets low enough, equities rise high enough, they prepare for other things. You can read the tea leaves here. I don't have to send you smoke signals again, right? Ladies and gentlemen, as a financial mercenary, I only matter if I can produce results. I have been producing results for my own life since I'm 15 years old, and I started learning this because I had no choice. We're the remora. We are going to feast on the sushi because people are getting caught up in these markets. You got to watch the people making their weekly numbers, their monthly numbers, and their quarterly numbers. We feel metals right now in the short term, we're bearish. I've been saying this. We're bearish. The markets are sitting in the what-if forest looking at the edge of a cliff. When it's range-bound, if you're disciplined, I go over what Jesse Livermore always said, you could take advantage of this. But when Operation Predator, when it begins, ladies and gentlemen, it's going to, the United States will print itself out of this situation. It will export its goods out of this situation. So you need to export your goods. You need a weaker dollar. How does this translate to crypto and XRP, the anointed one, and ICP and HBAR? In my lifetime, and I'm 47, this is the single greatest opportunity that I'm ever going to have access to. I say this, and this takes over all the refineries that our organization has taken public and developed throughout Southeast Asia. All of this, because what's going to happen right now is a transformation of how we live. The world is at financial war. Wars are not always fought kinetically. They're fought financially. We went over this. Wellington, Napoleon. We went all over this. Ladies and gentlemen, XRP is the future, and it is the anointed one. ICP is the future, and it's there. And HBAR. They're all combined of what they're doing and how they go about it. We will look back on these times and say, I wish I would have gotten more. Ladies and gentlemen, this is not financial advice. This content is for informational and entertainment purposes only and should not be taken as financial advice ever. Always do your own research and consult a licensed financial advisor before making any investment decisions, always. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You got two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves it'll never happen again, or you can be like the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intention. Because some moments history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in the broad digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes. Smash that like button, ring the bell, and leave on a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Public. We break down the major global banking trends shaping digital assets today, giving you content, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, stay in the Republic. I love you all.